Mel, everybody, I'm Cantonese Cat. Hey, everybody, Cantonese Cat here. What a rough day. What are you gonna do? Are you gonna buy? Are you gonna sell? Are you gonna be in cash and not do anything? This is the S&P 500 chart. This is the monthly chart. This is the Bollinger Band that's being shown here. With the Bollinger Band, you're going to get a 20-month moving average. Usually in a bull trend, you have the 20-month moving average continue to upslope, and it can serve potentially as support should you need it. Here, you can see how it broke down underneath the 20-month moving average, and next thing you know, you continue to have a bear market here for quite some time until it reverses and back test it, and the rest is history, right? Right now, we are getting close back right into the 20-month moving average that we haven't touched for quite some time, over about a year and a half, right? It also is getting to the 1.414 level over here, right? What happened in the past when it gets close to the 20-month moving average? Well, a lot of things can happen. They can either break down of it and get to low Bollinger Band. You can break down it and get to low Bollinger Band here during COVID. You can break down it and get to low Bollinger Band here during the tariff crisis #1 back in 2018. You can have a couple of these kind of rug pulls over here in 2016, 2015, right? Or you can hold it over and over again. Here it held, here it got close to it, it broke down. Here it got close to it, didn't really break down. Here it got close to it, didn't really break down. Here we touched it, and next thing you know, it just went a lot higher. Here we touched it, it just went a lot higher. And right now we're right at the junction here where it gets pretty scary because it dropped a lot. And because it dropped a lot, and everybody thinks it's going to drop down a lot lower. Can it drop down a lot lower? Sure it can, but it doesn't have to. And I think right now you're getting close to maybe some pretty interesting levels here to kind of pay attention to. The NASDAQ, which is represented by the QQQ, you can see that it is also getting close to the 1.272 log. Actually, is a regular fib level. And it's also already back testing the 20-month moving average. It's already kind of broken down underneath a little bit over here. And if you kind of zoom out here you can see SPY touch the 20-month moving average. QQQ hasn't even really touched it. And it's just kind of outperformed right now. It's kind of underperforming SPY here a little bit. I think it's a little bit more exhausted compared to SPY. And it's touching the 20-month moving average here. What happened before? When it touched the 20-month moving average, let's see SPY touch the low Bollinger Band over here on COVID. Here, what did QQQ do? It only touched the 20-month moving average over here, and next thing you know, it just ended up bouncing a lot higher with a big giant wick underneath over here for the month of March. Same thing over here with the tariff tantrum. Had a false breakout underneath the 20-month moving average, and it just broken back above, back tested it, and went up a lot higher. And you have all these different same moves over here, and you have also touched the 20-month moving average here many times on the way up, and it doesn't necessarily mean there's anything bad's going to happen, but can it drop a lot more to, let's say, the 350 range, or even back test this range over here around 380, or get back to the 0.786 here around 375, which is going to be a big giant rug pull all the way down here. Well, as long as the 1.272 and the 20-month moving average over here is holding, you might be okay, right? And I think that this is something that has happened over and over again in the stock market. Over and over again in the stock market. If you look at a higher time frame, honestly, it doesn't matter that much. And I don't really think, for my personal personal opinion, I don't really feel strongly about needing to drop down that much lower. But again, there are all these levels down here below, right? The monthly kitchen all the way down here at the previous all-time high. Can it drop down that much lower? Sure it can. The thing about it is, I think minimally, because we're just so overstretched underneath the low Bollinger Band here on the weekly, right into a fib level, I think minimally we're probably going to having at least having some kind of mean reversion back closer to the 1.618 over here. I think minimally we're probably going to have some mean reversion here. How it reacts out when we get up there, I do not know. But I think minimally we probably due for some kind of mean reversion to kind of push up. Are we going to have a great reaction kind of like we did over here, where we get underneath the Bollinger Band over here? Maybe, maybe not, right? All I know is right now, yeah, things are scary because it's been just going down straight for 7 weeks in a row without really having any kind of relief. And I think relief is probably going to come soon with a little bit of a mean retracement here. If we end up breaking down, then we try to find another double bottom here. Or if it ends up keep going down lower, that's a different story, right? But I think minimally probably going to end up having some kind of mean retracement. So to me, I just don't think this is like, even as a trader mentality, I don't think it's like a good area tier 2 to really sell. That doesn't really make a whole lot of sense to me to do that here. What about our beloved IWM? What is IWM doing? Well, guess what? It didn't hold the 0.5 and up plummeting all the way down to 0.382, right? All of that happened in a single day, right? All of that happened in some pretty sick volume over here, right smack in a 0.382, right? That's sick. That is sick. Whoever devised this move over here is sick in the head, right? It's sick in the head. It's so sick in the head to the point that it just makes you doubt everything, right? Makes me doubt my bullish thesis, right? Because right now, technically, I think even if you look at a higher time frame here, well, I guess if you look at that, we haven't really had a higher low here. This would be the first higher low after this big chime move on the way up, because there really wasn't a high low type situation. So, touche. You want to go back to those 0.382? Touche. So be it, right? And that's exactly what it did. Now, the question is whether or not, where's the opportunity going to be at? Is the opportunity like cash right now? Is it in the bond market? Or is it on the small cap because it's just been so destroyed? Or is it going to be on large caps because they're going to recover more, right? That's a very, very tough question to answer. Now let's look at the monthly chart over here of the spread between SPY and IWM. I'm seeing that price, or this SPY over IWM is going up when the RSI is going down, right? So this is a little bit of an exhaustive move. You can see as this ratio keeps on going up over the last year and a half or so, the RSI continued to trend down, right? So I think that SPY over IWM, SPY overperformance over IWM seem to be maybe a little bit more tired now. And to me, I think when I see something like this, I generally like to maybe rotate a little bit more into the small caps when I see something like that. I mean, granted, they can both go down together if the market just sucks. You know, they're all just going to plummet all together. And so be it, you know. But if I have to buy in the stock market, I just myself feel a little bit more comforted if I end up buying small cap over large caps because of some bearish divergence here that I'm seeing on this SPY over IWM spread. Now, another thing too, if you want to find a moment of opportunity, I've also mentioned another stock that I actually like better. A lot of people are also mentioning Nvidia, you know, as something that they want to get into right now. To me, I think Nvidia is showing a lot of weakness because it's got a very much around the top after like 13x, you know, it's showing a lot of weakness. It could go down further it's always a possibility for it to go down further. I don't think it has to. Reason why is it's getting closer to 20-month moving average, right? This market moving stock has been getting closer to 20-month moving average, right? So when it does that, if it breaks down, then yeah, then down we go. If it actually holds, then you might actually be okay, right? Sometimes you have an uptrend that backtests to 20 and it holds and you just end up going a lot higher, right? So right now we're at a very, very important decision point that's coming up soon. We'll see how Nvidia reacts, but you already had the full Bollinger Band expansion. And right now this bull trend from, you know, that's shown by the Bollinger Band expansion over here is showing a little bit of a Bollinger Band contraction here, right? So you see the same thing over here. You have a contraction. Usually that's when the market, the bull market tends to get a little bit more tired. Here it may not like up, you know, it doesn't always have to do that. Same thing, Bollinger Band expansion, very, very parabolic uptrend. Bollinger Band contraction, getting tired. You sort of have a little bit more of a, you know, kind of like around the top kind of thing, and then just end up correcting 3 months in a row down to the lower Bollinger Band. Here, Bollinger Band contraction, back down to their 20. We'll see whether or not 20 holds. If it's able to hold, then we might be able to break out again. If it doesn't hold, oh boy, I still think that it probably will end up holding, but hey, I don't have any concrete evidence to prove to you that it's going to do that, right? Now, am I going to want to buy Nvidia, or am I going to want to buy Tesla? Where Tesla had the bullish band expansion that might just have gotten started, and the 20-month moving average has just been flipped from resistance over here to support, right? And we backtested support for the month of March, and so far April has done absolutely nothing, right? It seems like that might be a little bit more of a, how do I say, it might be a little bit better risk-reward ratio, maybe. If you do a spread between Nvidia and Tesla, you can call this a bull flag, but overall, if you look at a lower time frame, it's really been forming nothing but lower highs and lower lows on the Nvidia over Tesla spread. So Nvidia has been underperforming Tesla here for quite some time, really since June 2024, right? You put some indicator, you don't really have to. You can see how it has an important zone over here, broke down. It had a bearish back test, got rejected, so it probably wants to go lower. You can also see the same thing. I put the Ichimoku cloud here, broke down underneath the Ichimoku cloud, back testing it, hit a bearish back test, couldn't hold. It might end up going down lower. So to me, I think that Tesla might be the better bet based on looking at this. But again, it's hard for me to say for sure. One really, really important thing, and I'm not going to talk too much about Bitcoin because I'm trying to reduce my screen time. I don't want to talk too much here. But I just wanted to get used to just sharing my thoughts here again. So I'm going to try to keep this video short. One last thing I want to talk about is whether or not you should invest in Nvidia over Bitcoin, right? And this is also showing you a very, very similar pattern where really since July of 2024, Bitcoin has been outperforming Nvidia. It's been kind of going sideways over here for about, about like a year and a half, 2 years. But overall, I think that there is a trend for Nvidia right now to kind of underperform Bitcoin. And the trend of Nvidia outperforming Bitcoin seems to be over. I'm going to show you the Bollinger Band here, and that tells you the whole story, right? You have the 20-month moving average going up, serving support, had a little bit of higher high here, but it looks a little bit exhausted top over here, right? And up not breaking up that much higher. End up getting tired, end up breaking down underneath, back test the 20-month moving average, couldn't break through, and now it's the downtrend, right? So Nvidia over Bitcoin, looks like Nvidia's outperformance over Bitcoin could be over. That's kind of what it says, right? And you can also look at it another way. It doesn't really matter which one you put on as the spread or on top or bottom. Just look at this, like a downtrend of Bitcoin's underperformance here on a monthly has now kind of flipped around. It looks like it wants to outperform Nvidia moving forward, right? So if that's the case, if the SPY over IWM chart looks exhausted, looks like large cap over small cap advantage, look like maybe a little bit exhausted, and if it looks like, for example, Bitcoin maybe outperforming Nvidia, where you should put money at? What's a proxy that is that mines Bitcoin, or any particular exchange that you can trade Bitcoins with, or are they potentially small companies that belong to like the small cap index? I wonder if there's any other companies out there that are like that could potentially serve as kind of like the liquidity, how do you say that? The advantageous liquidity input. Anyway, I don't know what I'm talking about. I'm just showing you charts here. I just think that there is going to be maybe a little bit of underperformance here on the large caps, particularly Nvidia, over Tesla, over Bitcoin, and also the large cap seems to be a little bit exhausted when it comes into comparison with the small caps. All of those are at some pretty interesting support level. They can break down at any time. But as an investor overall, I do some cycle trades, but as an investor overall, where would I want to put the money in right now? You decide. All right. Take care, guys. Bye.